beautiful picture up here in the meantime. Dude, I love how they did that for you. Or I don't know if that was
Yeah,
yours.
no, they did, but I gotta get a better picture on there. It just looks super grainy.
Dude, I mean, I love it. I'm gonna walk through some slides and then dude, I'm just gonna make you the host and we'll kind of I don't want you to have to walk me through your slides just for sake of
No,
time.
we're good. I mean, you put the slides together from the information. There's probably only one slide that I'm gonna have to like on the fly kind of correct a little bit. It's that TTO slide.
Yeah, I don't think I filled it in. Well,
Oh,
I
it's
mean,
I think it's filled in, but I'll kind of explain the triangle layout.
yep. Okay, so if you guys are just joining, awesome. Bob is using the chat function. That's amazing. There's also a section called Q&A. So this is a little different than your typical Zoom meeting. It's not a quote unquote meeting. Let me turn my camera on just in case. It's not actually a meeting. It is a, what do you call these? Webinar. So a little bit different functionality. We'll have a handful of people coming in. There he is. What is up? We've known each other for a couple, I don't know, year or so, a little bit.
Yeah, yeah,
We
close
met
to
in
a year.
Discord land. Close
Yeah.
to a year? Yeah.
Discord land.
Yeah, we hit it off. I mean, we'd known each other as pro traders really. And when I first talked to him, he was working on on a, what do you call it? Like a script, right? Automating some type of alerts or signals, things like that. And you know, I didn't learn the strat when I was trading. I learned, typical candlesticks, your support, resistance, trading up pivots and breakouts and things like that. But I resonated with OG when we started talking. I was like, dude, man, if I could have ever put something together that was so simple and so clean to teach people just candlesticks and the basic like logic of how you need to think when you're trading, how do you create your targets and define your stops, like dude, this was the most, I don't have a better word like phrase for it, but like simply elegant,
Simplicity. Yeah.
yeah, like
Simplicity.
solution. But yeah, I think we're a little bit over time, so we can go ahead and start. Actually, OG, if you want to give them a quick heads up, welcome, dude.
Oh yeah,
Just
sure.
a little bit about your story, what your background is, what you're doing, and we can kind of kick this off.
Yeah, sure. So kind of like how Paper Gains was saying that we kind of met on Discord through the fact that like I was trying to work on bots for Discords because that's what everybody seemed to want, just to get fed the information and get told when to buy and sell. And then I started to kind of gear or change trajectories into more of an educational aspect. So kind of scrap that idea and really found a home with Addicts Trades with a bunch of other stratters that were like-minded individuals that like trading price action, like trading the strat and trying to educate others, and then found my way to Cyberdog or Strat Soldiers weekend shift with the Sepia Group on Saturdays that he always has the weekend shift. And then before you know it, then I've got a Sunday show with the Sepia Group as well. And that's like, I'm OG Trades on Discord and Twitter, but like the actual, like the OGs of the strat are in the Sepia Group. And that's where Rob Smith, the creator of the strat, is I guess called housed. I mean, that's his home. That's where he has his seminar, not seminar, his course, and he does daily videos and he does all sorts of stuff there with the Sepia Group. But my background, I've been trading for 13 years. I have been profitable for 8 of those 13 years. So I understand everybody's pain when they're trying to find the way to trade or what makes them profitable. And so I've been through all of the trials and tribulations that come along with trying to become a professional trader. For right after the military, so for most of you guys that don't know, I have a military background. I was in the Army for 7 years. And right after that, I was able to get an internship with a hedge fund and was able to do market research and market analysis. And so that was my background before I left and tried to do it on my own. And doing fundamentals is completely different than trading. So what I mean by that is the fundamentals are great to be able to understand the health of a company, and you can make projections about what the price of the stock should be based off of earnings, based on off EPS, and based off of their P&E ratio and all these other things that go into evaluating a company. Yet it doesn't translate or correlate very well when you're trading and you're day trading. You're trying to do this to earn an income per se. So it wasn't until after about 3 years of pain that I reached out to one of my old bosses. He became my mentor and really kind of showed me the ropes. And literally, he just said, focus on price action. That is all you have to worry about, because everything else follows price action. Price action precedes everything, even news, especially for retail traders. There's news events that come out, but typically you'll see price move before you even see the news come out. So for retail traders more in particular, is very important to understand how to read price action, how to read the market structure, and understand where to go long, where to go short based off of those technicals. And as we'll get into the slide, when I talk about technicals, I don't really mean technical indicators or patterns that you're looking for. What I mean by technicals is just the technical levels, the price levels that we're going to either go long or go short, and then implement things like full time frame continuity, so you understand where the buyers are, where the sellers are. And we will go through all that stuff. But once I found the strat like a year and a half ago, Rob Smith simplified how I learned price action. And it was like a light bulb click moment where it was like, oh my God, if I would have been explained price action in this way, I could have picked it up much faster. And so you guys now, newer traders or traders that have been trading for a while, maybe since the pandemic, I mean, it's been 3 years, but you could pretty much throw 3 or 4 letters together, slap them into your brokerage, and you'd make money. That's everybody thought that they could make a living off of it and they would be the best trader in the world. But not understanding price action and market structure is really starting to hurt people, especially since the beginning of this year, like early last year, beginning of this year, to really understand the price fluctuation, how price aggregates, and the way that price moves in these broadening formations, which we will also touch on. But price doesn't move horizontally. Even when price is in a range sideways, it's still not moving sideways. It's still fluctuating, taking out highs, taking out lows. And it's that series of broadening formations that create the bigger price discovery that we like to see. But we will get into all that. But that's kind of my background. Originally military. I went through the university stuff, military, came out, worked at a hedge fund, came out, worked for Kraft Heinz for a while, worked for Amazon as contracting work due to my degree in operations management and analysis. So I've been able to work with some really good companies. And then from there, really, I was like, I'm tired of working for everybody else. It's time to work for myself, and went out on a limb, and yeah, now we're here.
Beautiful. Yeah,
Now
man,
we're
love it.
here.
I think, that story of people starting to trade, especially in Discord, I think it is absolutely a younger demographic, clearly. But
Yes.
sorry, we're old. We're the boomers. Sorry. But all of our guys call us boomers, but
Yep.
and girls. But anyways, I think, yeah, that message of, like, everybody was a pro coming out of the pandemic. Like, I mean, let's be real, right? Like, everybody was like, oh, I'm a pro. It's just the people that are left, I feel, are the ones that are willing to put the effort in. And so the reason we do things like this, like School of Gains, and yes, if anybody's asking, I run the Paper Gains bot, so swing trades, day trades, that's me. We have about like 20 different servers here. So, appreciate that. There's no, like, we're not scalping. I don't scalp or anything like that. I'm not a good scalper. I'm not good at quick trades. But I will tell you, the last series of school of gains that we did was all about options and volatility because that is my specialty. But what I saw was that the people that are left honestly are trying to make a real go at it. So I figured that this was a good opener for, if you want to trade, you need to learn price action. That is half the battle in terms of options, volatility, and all the other stuff that we've already done. That's the other half. The strat, and specifically OG, man, like the strat was the best system to start your training. Like the first place that I would go, like you said earlier, if we had learned this system from the gate, like we probably
Yeah.
would have learned a lot faster, right? Like
Yeah.
this is going to be the foundation. I think everybody does it a little bit differently,
Yes.
and
Yeah, they
has
do.
their own spin on it. But at the core of this system, what he's going to walk you guys through, this is 100% what works. It is nothing that doesn't work. So there's not going to be any objective, situations here. It's all going to be just what is true and none of the nonsense. So I think with that, I'm just going to kind of kick this off. I do have to
Yeah,
give
go for it.
quick disclaimer before we get started. Just read the screen. If you're options trading, call 188 options before you get started and get a copy of standardized risks and characteristics of options. Otherwise, carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resource. So I'm just going to walk through this. I think, OG, you have some of this stuff, but
Yeah.
we went over simplicity and elegance in terms of why the strat, right? From your experience, and this is, I don't know if you guys have seen this. I love this freaking chart of the old patterns, right? But
Oh,
like,
yeah.
there's so many different variations. Both of us started out without the strat. And if you could kind of give a quick example of what it was for you before the strat, and then the next slide I'll walk into is essentially the bar screenshot.
Yeah, of course. So when you start to try and be a trader, not an investor, you need a good combination of fundamentals and technicals because they have to align, because the fundamentals will tell you what to trade and then the technicals will tell you when to trade it. So when you're a trader and you're trying to use traditional technical analysis where you're looking for these type of patterns, each pattern has a failed pattern that is attached to that pattern. So it just doesn't make sense that, well, if this works, then this is what it's going to do. But when it fails, then, this is what it could do as well. So you show the same chart to traditional technical analysts and you show it to 5 different traders, they're going to show you 5 different things. They're going to draw it differently. They're going to see things differently. Not saying that a couple of them might see the same thing and might be like, oh yeah, that's a cup and handle, but that cup and handle was still showing many broadening formations to form that cup and handle, in which case it's just price action. Everything is just price action. It's just how are you going to play it? What time frame are you going to use? What time frame are you using your analysis on? Are you considering every single time frame? And that's what's more important, because this stuff, the traditional technical analysis and pattern recognition and stuff like that, is typically just on a single time frame and it's just subjective. So depending on what time frame you're using, you could see a head and shoulders, but in a different time frame, you might see it as a reverse symmetrical triangle or a megaphone, or you might see it as an inverse cup and handle. So it's just it's too subjective. You want to be as objective as possible.
There's so many playful people that'll play this, right? And the stratters. He mentioned something, so I just want to make sure that you guys understand. Pattern recognition and things like that is very time frame dependent, and if you're on the wrong chart, you're not going to see the same pattern. So that's one of those objective situations where like the pattern can change based on the time frame that you're looking at. All of that goes out the window when we go to the strat. And I mean, there are a handful of basic setups, but again, this is just the basic outline of what does it look like, and not subjective to a personal view of what this pattern is going to play out as.
Right. And you bring up a good point that, if you look at this cheat sheet and you don't know anything about the strat, you haven't seen Rob's videos, you haven't seen the weekend shift, you haven't seen my show, you haven't dove into what the 1 and a 2 and a 3 are, this is going to look completely foreign to you, but this is really just a handful of setups that play out in different combinations. And that's why we call this the combo sheet. And there's many different versions of it kind of floating around. However, this one picture kind of shows what the combos are, what the setups look like, a small little blurb of what a Browning formation looks like, what a pivot machine gun is, and things like that. So
That's my favorite.
yeah, it's completely, I mean, that's as broad as you can get for a combo sheet. So the fact that the strat it works on all market conditions is what's important, because the market isn't going to be one single market condition. You can have bull runs, you can have bear markets, you can have sideways markets, but this, when you learn price action, you can play every single type of market condition, and you can use it on any time frame. And the greatest thing about that is if you use those smaller time frames, you're going to be able to see almost a domino effect to trigger bigger time frames. And so when it all works together and it works in conjunction, and you're using multiple time frames rather than just a singular time frame, then you're going to definitely be able to be one step ahead of everybody else, because you'll know where those market participants are.
Here, do you want to just jump into some of the meat of it? I think,
Yeah.
uh, and what the scenario. So, if you guys are in chat, if you can let us know, does everybody have an idea? We just want to know, where are you coming from? Do you already know what the strat is? Do you have a basic assumption? In chat, that's fine. There's a lot of stuff going on. If you can throw some actual questions in the Q&A section, we'll definitely get to that. But yeah, first, okay, so first time, no clue, love this. Look at this, dude. 1, 2,
Yeah.
3, yeah. Oh, beautiful. Okay, so
Yeah,
we're gonna start out.
We're starting from
Boom.
the beginning. We're starting from
Yeah.
the beginning.
All right. So
All
this
right.
is to me, you guys are the most important audience, right? You're the next generation of investors. And both of us, OG and I, we freaking need you to survive. So stop what you're doing. No more gambling, and let's figure this out. So OG, do you want to just kind of break it into the scenarios and what
Yeah,
they are and why
which
they are?
let's do this. Why don't we get into those scenarios, and then we can revisit this slide again and zoom in like you did a little bit ago, so that
Yes.
we can really take a look at that cheat sheet. However, let's get into the scenarios. I know you have the slides for the scenarios. If you want to go ahead,
Oh,
we'll
yeah.
do that. We'll
If you
move
want to
forward.
take over too, like,
Yeah, no, we're good.
okay, so let's just jump into scenarios.
Right, exactly. There you go.
Boom.
So you have 3 different scenarios, and we're going to be talking about scenario 1. A scenario 1 is also known as an inside bar. And so when we talk about these scenarios in numbers, as far as 1, 2, 3, it's just so that we can communicate faster, because as we know, the markets are fast. So when we're talking with other stratters, other traders, it's easy to say a 1. Like, I see a 1, and they'll know that I mean inside bar. If you keep things as one syllable, it's a lot easier to type. It's a lot easier to talk. You can talk.
Yeah.
You can move fast with the markets. So whenever a stratter says 1, that's what we mean. It's an inside bar. We were not able to take out the previous bar's high or low. And when we're referring to the current candle, we're always going to refer to the previous candle as far as what that current candle is looking like. So if it's a scenario 1, we're always referring to the previous candle. So we were not able to take out the high and low, and that's what creates that inside bar. Shouldn't be any questions around that, but I do know that there are going to be questions that are coming up. So we can go ahead and take a look at the scenario 2.
Yeah, beautiful. And just when he says stratter, since this is brand new, a stratter is someone that trades using the system, the strat. If you guys go onto Twitter and you just search hashtag the strat, you're gonna see all kinds of stuff. But it's like a language that will speak. And in Discord, to be fair, Discord is like a baby in terms of the trading world. It's so new and inexperienced, quite frankly, like that. There are certain things. So the candles. So here's the candle, right? And if you didn't catch it, he's talking about, oh, this is scenario number 1 of the 3 scenarios that can happen. It can either go not break the high and not break the low. That's called the inside bar. That's what he's going to refer to as scenario 1. Scenario 2 The only is so of the three possibilities, this is scenario two. You want
Right.
to walk through this one?
Yep. So scenario two, and I apologize if I don't go right by the wording of the
No, no, no.
of
Don't worry.
the
I'm
of
trying
the
to like
slide.
connect the
No,
dots, right?
yeah. Perfect. So a scenario two is a directional bar. So when we say that it's a two, it will always be followed with an up or a down or a 2U or a 2D, because you want to know the direction of the candle. So if I say that we had a 1-2 up, then because we know the two scenarios now, that means that we had an inside bar and then we had a 2 bar that was directionally up, meaning that we only broke the high of the previous candle. And that's what makes it directional, is because we broke only the high of the previous candle. So yeah, perfect. So you're only breaking that. In the other picture, these are two downs because we only broke the bottom of the previous candle. And so that's what makes them directional. So if I say we had a 2 up, 2 down reversal, that means that the first candle was a 2 up, and then the following candle was a 2 down, meaning that we had a reversal, because we want to know that, since there could be change in continuity. The bulls might not be in charge anymore. Now that we were able to take out the lows of the previous candle, we could have a change in continuity and the bears are now in charge. So that's the scenario two. It's one or the other. And so it's either up or it's either down. And then now, if you want to go, we're perfect. Now we can kind of transition into this scenario three. And a scenario three is also known as an outside bar. And once again, it's easier to say three than it is to say outside bar. It's easier to type a three than it is outside bar. So that's why we use these. So a three is a failed two, okay? And I think you have an asterisk down there. But what I mean by that is, because it's an outside bar, it was able to take out the previous bar's high and the previous bar's low, one way or the other. It took out both sides. So when we're looking at these candles that are outside bars, that is as much price discovery as you can get in a single candle. You were able to take out the previous candle's high and low. So that means that there's a change in continuity, and the 3 bar by itself is the only scenario that is considered a rev strat, which is a reversal strategy, because it changed continuity within the same candle. Okay, so those are the only 3 possibilities from one candle to the next that could possibly happen. You can either stay inside in a scenario 1, you could go directionally 2 up or directionally 2 down with a scenario 2. And a scenario 3, you were able to take out both sides of the previous candle. The other thing that I want to note is we are going to get into the concept of a broadening formation, or as boomers know it as megaphones, or
Megaphone.
or even older people will call it reverse symmetrical triangles.
Yeah.
So it's been around for a very long time. These concepts are not new concepts, but the strat is new in terms of how we communicate price action. And that's the beauty of it, because it simplified it, okay? The reason why 3s are important is because there is typically a change in continuity. So if you notice in this picture, as soon as we had a 3 scenario down, the very next candle was a 2 directional down. So it gives you kind of a glimpse as far as, okay, who is in charge here? At first, that first 3, the buyers were in charge because we were able to open, push price higher, and then the sellers stepped in and really drove price down. And then you had a continuation that following candle. If you look at that second 3, it was at first, it looks like it was a gap down, came down slightly. The bears were still in charge, the sellers were there, but then it got picked right back up and was pushed through the entire range of the previous candle to make it a 3. And we don't use up or down, but it was a 3 to the north side, to the highs, and then we get a continuation to that following candle. So it's important to understand that the 3 can give you some direction as well, but it's more important to understand that the 3 just means that on a lower time frame, you have a broadening formation. Okay. And we'll explain that when we get to other charts and things like
Yeah,
that as well.
actually, if you want, do you want to, do you mind if I just make you a host and we can kind of skip the rest of the slides? I have other stuff, but I think we're getting to a point where I think it's probably just going to be better if
Yeah,
we
sure.
show them. Yeah, so I'm just going to make you host. I'm going to stop my screen share for just a second. Oh, wow, that's a big picture face of me. So, all right, so you're the host. Can you try and screen share?
Yeah, I
See how
will
that
go
works.
ahead and try and do that right now.
So if you
Hey,
want
what do
to,
you know? I can screen share.
oh, nice, beautiful.
Look at that. And then I will optimize it for a video clip since you're recording anyway. So I'll just do that solid. All right, let me know if you can see my screen. Should be able to see the SPY.
Beautiful.
Can you see it?
I can see it. They're saying yes, they can see it.
Okay, perfect. Because for some reason I shared my screen and now I can't see the chat or you
You
guys,
may
but
not be able to see it.
that's all right. We'll be fine. So here, I'm currently using TrendSpider, but I can also show it on TradingView as well. But we'll just go with this for now because I kind of want you guys to walk through what we're looking at with those different scenarios. So what I'll do is I'll get rid of this stuff and I can walk you guys through all these different strat principles to show you where we're at. Hey,
I love that they don't know what platform you're using.
all
It's
right.
fine.
Hey, give
Oh
me 1
God.
second. Hey,
He only got 3.
and so you guys know too, that chart was the ES. What's nice about the strat is that it works with any underlying, any type of instrument. So you can use this for crypto, you can use it for Forex, you can use it for futures, for commons, for options, for everything, because it is just price action. Okay.
Yeah, and the strat is so common. One of the guys, Roger, was asking if TOS has a script for
They
this
do.
also. They absolutely do. Almost every platform has some kind of script that will help you label these scenarios, which again is one of these things that, and yes, it can be used for Forex, it can be used for crypto, it can be used for futures, it can be used for like bonds. It doesn't matter if you can chart it, this will trade it. Like that is it. And it's just that simple. So anyway, sorry.
Yeah,
Go
no, you're
ahead.
good. You're good. So here on this chart, and we may just oh no, futures is closed right now. I was going to say maybe we could just look at live data. Well, actually, we could go to crypto and look at live data as well. Why don't we do that? Because I think it'll be more instrumental if I can show you guys in real time how these things play out. So if you're cool with that.
I mean, so the biggest concepts, like if we can get through, just
Yep,
here are
that's
weather
what,
scenarios, how to trade them, and then time frame continuity, which is huge, broadening formations, and TTOs. I think
yep.
that's it, right?
That we're going to cover all of that stuff here in this indicator. And I sometimes I hate to say that it's an indicator, but you're going to find it in the indicator section. It's just called the Strat Teach version 2. And it's a very robust indicator that you can mess around with once you're done with this webinar. But the Strat Teach version 2 is the indicator that we use, and I call it an indicator because that's where you're going to find it. However, these aren't like traditional indicators where this isn't like an RSI, it's not a MACD, EMAs, anything like that. It's just it just paints the candles for you if you want, and it has the numbers as well, so it's easier to identify. You can even have the 2 on there, which I'll turn on just for everybody to be able to see where the 2s are. I'm going to use, I'll just use green for that. So you guys will be able to see.
Bob's trying to suck a futures trade out of you real quick. I love it.
All right. Yeah, that's fine. So you can see here that directionally you have a 2 down, here you have a 2 up, here you have an inside scenario, here you have an outside bar. So you have a 1, a 3, plenty of different directional candles that you have here. So when we're talking about different scenarios or different combinations, you're looking for different reversal patterns and things like that. So as Paper Gains had that original combo sheet, the way that you trade these is by looking for reversals. Continuations are nice, don't get me wrong, but continuations are just that. They're just continuations off of reversals and at any point, those continuations can reverse. So what we're trying to do as traders is try and find where those reversals happen in price. So when you have a directionally 2 down candle, and then you go inside with a 1, that just means that it's consolidation. And once you have some consolidation, as traditional technical analysts would probably say, like on a lower time frame, this is a bear flag that failed. Bear flag happened to break up to the highs rather than breaking down to the newer lows. So that's why we don't talk about bear flags, bull flags, and symmetrical triangles and things like that, and other different patterns that you can see. But because we're looking at strictly price action here, we can see that we had very bearish momentum. It stalled out, consolidated, and then reversed. So you have many different types of reversal patterns. So this would be a 2-1-2 reversal. So if somebody on Discord or somebody on Twitter was saying that Bitcoin could potentially have a 2-1-2 reversal, that just means that in this case, and I'm using the replay feature here, that if this is all we knew, that here's a 2-1, we're looking for either a 2-1-2 continuation or a 2-1-2 reversal. And so when we talk about those combinations, that's what we're talking about. Because if we go forward in time, there you get your 2-1-2 reversal. The way that you play these candles, and this is the most important part that everybody wants to know, is, okay, that's good. I know the combination. I know what to look for, but where do I take the trade, right? So if all we knew was, oh, I got to go one more forward. If all we knew was this, we had a 2 down and an inside bar, your entry in either direction is going to be the high or the low of this candle. Reason why is because we have this consolidation, and we can get a 2-1-2 continuation if we happen to go down, and we have a 2-1-2 potential for a reversal. So because we know where our entries are, the nice thing about the strat and the nice thing about price action is it actually gives us what our magnitude is going to be. And what we mean by magnitude is it gives us a price target. So it not only does it give us our entries, let me change the color to this real quick. So this is our long. This is where we would take it short. This is where our first price target would be, to the highs. Okay, and then we'll change that to be a price target. And then we can go down here for that price target. Okay, so it gives you your entries and your price targets. And not only that, but it also gives you your stop. So this is what we're looking for. We want a 2-1-2 reversal back up to the highs. And this is our first price target. If we get a 2-1-2 continuation, this is our entry. This is our price target. So when we get triggered into a trade, and when we say triggered into a trade, that means that we've now broken one of these sides. So if we trigger a 2-1-2 up, we take that trade as soon as that level breaks. So as soon as 28,472.05 breaks, that's where we're going to take the trade to go long on Bitcoin.
So for someone that's new,
Yep.
and I know that you're talking about triggers, right? So just can you walk through what that looks like? Are you waiting for a brand new candle to open on whatever time frame you're looking at, or like what constitutes a trigger?
Yeah, that's a great question. So to clarify, this candle is now closed. So once this candle closes, you're waiting for that next new candle to break one way or the other. And as soon as it breaks that price level, that's what we mean by it triggers, or that it goes in force. Okay. And so that's a great question.
The strat talk that you guys always say, enforce.
Yeah.
All right.
So when this thing goes in force, your blood should be pumping, because you're like, yep, we're going to hit this thing and we're going to take it long.
And we're getting paid, right?
Yeah, exactly. And we're getting paid. So what happens when it triggers and goes in force, that's where you take the trade. And not only that, but this now becomes your stop. So you already know where your stop is going to be. And then it's your job to manage that winning position. You don't want to manage your losing positions. And that's one of the greatest things about the strat, is that we try and preach that you manage your winners and you cut your losers. So in this instance, we go forward in time and we can see that we broke up to the highs. It came back down slightly, nowhere near our initial. And what I mean by initial, and I'll show you here in a second, it never came down towards our initial stop loss. And you can see that it hit our first price target. So if you can be in two sides of this trade. So what I mean by that is if you're being disciplined, which every trader should be disciplined, you have your entry, you have your take profit, and you're out. As soon as it hits your take profit, you're out. Great trade. However, if you're the type of person that knows that you FOMO, and you're watching Bitcoin and it happens to shoot up even more, and you're kicking yourself in the butt because, oh, I left so much money on the table, and I should have left that trade on longer. If you subscribe to that type of thinking, then instead of just taking instead of getting out at your first price target, what you can do is move your stop up so that if it happens to reverse against you, you're now getting stopped out in profit instead of it going all the way back and knocking you out at your original stop. So the strat gives you the entry, gives you your initial stop loss, gives you your first price targets, and then it's up to you to manage it. So if the strat isn't working for you, because I hear this all the time, the strat doesn't work. It doesn't. I keep on getting losing trades. It's not that the strat is making you lose those trades. It's how you're managing that position, because
Right.
this is a clear-cut winner. There's no way around that. The strat gave you the entry and your first take profit and your stop. And it's not that the strat gave it to you, it's that the price action gave it to you. We're just able to communicate it more efficiently. So now
Yeah.
we have that 2-1-2. You take your profit and you're done with that trade. Be happy that you made money.
I just want to highlight too, there's a lot of questions, and I know you can't see the chat, but time frame, there was a question about time frame. I just want to make sure time frame does not matter. So if you're looking at a 15-minute chart, right? Well, it matters, right? But like for this,
Yeah.
for a trigger and an exit, if you're looking at a 15-minute chart, the second that a new candle appears clean above 28,472, there should be no question in anyone's mind that it's at least going to, what's the bottom of that red wick right before it, and if not the top of that, two candles before, yeah,
Oh,
if
yeah.
not the top of that right there, if
Yeah.
not the top of the red candle, it's going at least to there. It's not going below. The second that, if your entry was to 28,472.05, then that's your stop once you enter, right? And or at least 50% of this blue candle, or hard stop at the bottom of that blue candle. If you have a new candle that's below the blue one, right? There's no question in anyone's mind it's going straight to 28, right? Like that's not even up for discussion. It's just what's true. So I think that type of clarity for the strat, and if you want, you could talk about.
Yeah, no, that's good. That's actually a great word that I haven't used and I'm going to steal. It gives you clarity. Okay.
Sorry.
So it gives you clarity. There's no ifs, ands, or buts about it. That
Yeah.
Once it triggers, you're going to take that trade. Okay. And it makes it so objective, because once you do your homework, once you plan this trade. So as I talked you through this scenario, my trade plan is, if this happens, then this happens. If this happens, then this happens. So there's no question about it. So this worked in our favor. If we continue to go even more, this is the reason why most people will hold on to trades a little too long, because once they take their profit and they see a candle like this and they're like, oh man,
Dude,
I should have held on to it longer, dude. Like it just rocketed.
you know what I see a lot is so funny too, is like, and so some of the guys, so Discord has a lot of option traders, right? I think futures is about to be very popular. I'm positive.
Yeah, it's gonna overtake options.
Yes, because
I'm working on that, because I think futures
so is Jesse. We have a guy in our group, Jesse, who's a futures trader, actually running an AI like EA on the strat using futures. But what I would tell you, as an option trader, as a volatility specialist, price action is 50% of like how options pay you out. There's so many people that want to teach and trade price action, man, I'm just going to tell you, you shouldn't be using options. Like you can, but it's not the most efficient tool because options need a momentum breakout. And what I see when you see this kind of reversal, a lot of times people will go and they'll be like, I want to buy a 3 month out option for Bitcoin at 45K, right? Let's say something like that. That's what I see a lot. And if you're using a system like that, this will be very obvious. Like, you're way over your skis, right? Like the target is not 50, 45, 50, it's 28,792 and nothing else, right? And then you move to the very next one. And so that will, like, just understanding that, it will keep you safe from like taking those kind of wild bets. And in day trading options, since there's so many people day trading options here, is that you're the very shortest date to expiration, and you'll see a lot of us, myself, I don't know, Ace, Bryce, like all the bigger traders in Discord, you're fairly close to the money, always the shortest expiration, and we're just trading these very small moves. Whatever system you call it, they probably won't call it this, but I will tell you, you can watch their trades. It is this, whether or not
Yep.
they know it. That's a different story, but it is exactly this,
Right.
for your triggers and stuff like that. So sorry.
No, exactly. You're right. But to the point I was trying to make in this scenario is, so when I spoke about how you manage your winning positions, you can, one of two things, take your profit as soon as profit hits. But if you're the type of person that is afraid of a next candle being another huge rocket, just continue to move your stop up
Yeah.
there, and then you're not going to be afraid of missing a big move. So those are two different ways to be able to manage a winning position. But the whole point is, as soon as it goes in your favor, you're moving your stop loss so that if it does reverse on you and it didn't hit your first price target and it reverses against you, you're going to be out with a scratch. It's not going to cut into your capital. You're not going to lose a lot. And then if it continues to go in your favor, you're just continuously moving your stop up so that you get stopped out in profit. Because at any point, price can reverse. Just because you're trading price action and you're trading the strat and you're trading these combinations, if this candle did not hit this first price target, you cannot say, oh, the strat doesn't work. It's just that price was not accepted at this level and it reversed back. The sellers came back in. Obviously, there was selling pressure here. So if it never reached that high, it can reverse back against you because we know that outside bars exist. At some point, you could get a reversal back down. So the reason why we always say move your stops tight and you want to continue to move your stops is you don't always get moves like this. You don't get these continuations a lot. The most probable trades are reversals. And so that's what's important to understand, that you're managing these positions and you're not blaming the strategy, the strat, in when you have a losing trade, because it's up to you on how you managed it. So if we continue to go forward in time here, you have another inside candle. So we remember earlier in this seminar or webinar that I don't like to play two continuations. So if you missed this this reversal here where you had a 2 down inside 2 up, you don't want to hop into this and FOMO into all this move, because now you have another inside bar where we consolidated, and at this point it could reverse. I'm sure there's a lot of you guys that are listening that have felt this pain where you don't want to miss out on this move. You get in and all of a sudden it consolidates and reverses against you and you get a losing trade. What the strat allows you to do is understand what's happening with price action, and then you just adjust your game plan and wait for this candle to close. And you take, whoops, I inversed these by accident. Your new trade plan then becomes, okay, if we break 29,268.92 cents, then I'll take it long again. If it breaks below $29,033.84, I'm going to take that low. And then your price targets change as well. You have a very short price target to the long side there, which eventually that we can move that to one of these other higher wicks for our price target. But then if you move forward in time, you can see that we never broke the bottom and you could still take this to the long side. So as long as you're patient and wait for your trade, instead of FOMOing in, you wait for that consolidation and then wait to see what happens, because the trading is a patient game. You want to be patient and not try and predict where things are going. Predicting where the market's going is going to be a losing proposition. The reason why we're trading price action is because the only thing that is true at that moment that you're trading is the price that it is trading at currently. The rest of this stuff is just all previous information that you're trying to use to come up with your trade plan. So that's the important thing about understanding these combinations and scenarios, because at any one of these points, I move forward in time another 30 minutes, 45 minutes or so here in this chart, where you had that push up. It gave you direction again, consolidated again, and gave you more direction. So even if you missed a reversal here, you're still able to see that price is consolidating, it's getting accepted, going higher, consolidating, getting accepted, moving higher. So you can stair step your way through these trades. You can add to your positions if you're already down from here. And one of the most important things to understand in the strat is that price has to aggregate, meaning we have to take out highs and we have to take out lows. So these were lows, these were highs. We were able to take those lows out and we were able to take those highs out. So when we're drawing what's called a broadening formation, is you're looking at something similar to this. Now that we've taken out lows and we've taken out highs, now where is price going to go? Because the higher we take price, at some point it's going to have to reverse and correct itself just to move higher, or you get a complete reversal at the tops of these broadening formations and you go lower. So though that's what we're talking about when we talk about broadening formations. Okay, so hopefully that makes sense. I can hear you feverishly type in there, so I'm sure there's so many questions. No,
Yeah,
you're fine.
I
But
thought, if we could do so, we didn't hit something called time frame continuity first. So what I'm seeing in the comments is that there's a lot of people still kind of asking, well, how do I know, if I trade options, because so many people, even using the strat, use options, right? So Julian's asking, do you set your stop loss based on the price of the underlying asset or the option or the actual option chart? So I did want to, and this would probably be like a dual answer between you and I. But me, from an options perspective, I would say, like, you have to look at the time frame of your chart. If you're looking at a 15-minute chart or 30-minute chart, a 1-hour chart, you can only expect the length of your chart should be the length that you can expect to hold a trade. How's that, right? Just general guideline. If I'm looking at a 15-minute chart, I can only expect to hold a trade for 15 minutes, one candle to the next. If it's an hour chart, I can expect to hold it for an hour. 4 hour, 1 day, 1 day, 1 week, 1 month, different story, right? And you would pick your options series and expirations based on that. But if you're so many people look for more sustained move when it comes to options, because those are the ones that pay more. You really have to understand what time frame continuity is. And so, like, when you're actually, OG, when you're setting up a trade, can you walk them through the full process of, like, and I know that and he does this like literally every day, you guys. This guy will go on YouTube literally every day, walk through a full list of stocks. He does it with the Sepia Group every Sunday, and it's pretty interactive. You should check it out. I sent his link to YouTube in the chat. But what is the logic of walking through the process of finding a trade, and starting with time frame continuity? So on the bottom left of his screen there's a little box, right? And it says QMW. Can you just, like, quick high level, what's the significance of that, and what should you take from that, and why does it matter?
So yeah, I was going to touch on that right away. So it's a good segue. Okay. So once we understand the broadening formation, because we had talked about the scenarios, that what I wanted to point out real fast is that all this price action, if you look on a higher time frame, which that's how I was going to transition into time frame continuity, is that all of this price action is an outside bar of all this price action, because we were able to take out the lows and the highs. Remember, that's how a 3 is formed. If you look at those higher timeframes, you're going to see that this is going to be a 3 bar, like on the hourly or the 30-minute. So if we were to go to the, it would probably be an hourly or maybe the 4 hour. Not quite yet a 3, but in this hourly, you can see that here you had price that is all outside of all this price. So that became an outside of all of this. So the significance that that plays is that when you have reversals like this and you were able to take out lows and take out highs, you have what's called change in time frame continuity, because you want to be trading in the direction of time frame continuity. So if your hourly chart, let's say you're in the 15-minute chart, so the higher timeframes that you have are the hourly, the 4 hour, the day, the week, the month, the quarter, at least 4 of those timeframes you want to be trading in that same direction. So when you had the hourly change to green, that led to the 4 hour change green, that led to the day to be green, you're looking for that week to also become green. And so when you have all that work in your favor, that's a higher probability trade. In this instance, in this 15-minute, when we had this scenario where we had a 2-1, you were in red timeframe continuity. Every single time frame was red. So the higher probability trade would have been to have this go 2 down, and that would have been a more aggressive move down because you have sellers in charge in all of those time frames. It's when you start to see this reversal that then you have to consider that all these time frames are now going to start getting knocked down like dominoes. You have to change the continuity in the hour before the 4 hour changes. The 4 hour has to change before the day changes, the day, so on and so forth. So you guys get the point. I'm not going to insult your guys' intelligence, but you have, as soon as those reversals happen, you're looking for the rest of these timeframes to kind of get knocked out. And so when you're trading and you're looking for that setup, so before we knew all of this information, in this scenario, I would have wanted it to go 2 down. However, it didn't happen and I got the reversal. So when stratters say we can play it in both directions, we can play it in either way and we can make money no matter what way the market's going to go, that's what we mean, is that we're ready for both scenarios. And because we know that we have to change time frame continuity on lower time frames before we start to see those higher time frames change, then you start to see movements like this. If you miss this reversal, you still have this consolidation that at that point you were green on the hour, green on the 4 hour, and then you were about to be green on the day. As soon as you went 2 up from this candle, the day then changed to green. So now that you have buyers stepping in, you can I don't like to use the word favor the long side, but you will be in a higher probability trade if you were to take that 2 up. Okay, so that's the importance of time frame continuity. You want to do as much of your research and as much as your trade ideas on multiple time frames. So when you notice that the 30-minute time frame continue to go 2 up, the buyers are still there. If you look at the hourly, you can see that the buyers are still there. When you go to the 4 hour, you can see that you've now created this nice long hammer and the buyers have stepped in. So what you want is to see that continuation to take out these highs. And so when you're looking at these multiple time frames, that's what you're noticing, is that there's a change in continuity. When you have on those higher time frames inside candles, you're going to expect chop intraday. So for example, this is the daily chart, but in the weekly, if you end up with an inside candle, so last week on Bitcoin, anybody that trades crypto knows that there was just a lot of chop last week. It just chopped around. There was no real clear direction last week in Bitcoin. This week, we did see some direction. And then as soon as we hit 2,800, it started to push higher, buyers stepped in, and now we're changing that continuity. So when you're looking at these higher timeframes, and when we talk about how you can use this on every single time frame, this is a scenario where you have an inside candle that went 2 down. Because we're patient, and we should be patient as traders. As soon as this week is over, you then draw out your levels. So let's pretend we're already in Friday and you're getting prepared for or well, Bitcoin trades 7 days a week. I don't trade crypto, so I'm not sure what day it changes. Is it Sunday or is it Monday? Does anybody know?
I
No, you
don't.
don't know, do you?
I mean, I do
Let's just
not.
say for
It's
all,
like UTC
yeah,
to, you know,
for all intents and purposes. Okay,
Sunday.
Sunday. Thank you, Bob.
Yeah.
So on Sunday, when this candle closes and you're getting prepared for Monday's trades, you put your levels on there like we did before. So this is your long, this is your short, and then you're going to want to see a reversal in Bitcoin because you want that change in time frame continuity to catch a bigger move. The more probable move would be if we break two down, we're in full time frame continuity, and then you can target this low down here.
Can I point
So,
something out on your
yeah,
chart to you
definitely.
that's
Go ahead.
so like I think this is a great example. And especially if we're trading, let's say, indices today, you can look at this and say, "Oh, I'm a bull on crypto," right? For as an example, I would love to take a long position here. Well, just looking at this, that little thing on the bottom left will tell you, well, look, the week it's dumping, the month it's dumping, the quarter it's dumping, and it's continuing to dump. So if you took a long position, the odds are the momentum is not in your side. So when he says, trading with the trend, right? Like the best payouts that you'll get as a trader, you should know, is when you have all of those time frames lining up to you. So there,
Right.
if a better paying trade because the momentum is pushing it to this direction would be to the downside. Today is Wednesday or Thursday, right? And so someone says, well, yeah, there's 3 days left in the chart. Correct. This is a no trade right now, to be clear. And you guys should see that, look, it hasn't broken one way or the other. It's not until Monday or Sunday, when we get to Sunday, if a new candle appears for the week above $30,635.39, that you could take an upside trade just up to that, what? Only up to that blue line. That's your target. It's nothing higher than that. If it continues higher, great. You can stretch it up to the prior candle's high. And that's it, just at the top of that, right? And that's your target. It's not 45,000. It's not 75,000, right? If you get Sunday, now check this out, right? So you can see how small that target is on the upside. Just right there. That's it. On the downside, though, you'll have a trigger if Sunday comes around and it's below 28,000. If Bitcoin shows up below 28,000, where's your first target? It's very simple. 2025 and change. That's a much bigger target. It's a more profitable trade, and you have momentum going in your favor. So
Right. And
you
I think
have
that's
to be aware of that stuff every time.
yeah, that's the key too, is like I said, all these principles that we're teaching with the strat is just, it's almost like just a different language, and it's wrapped up in this package that helps us communicate better. So when we say full time frame continuity, trade in full time frame continuity, essentially all that means is you're trading with the trend, because the trend in the momentum right now, and I hesitate using the word momentum as well, because momentum is kind of just a term that helps people visualize what's going on, but price cannot have momentum by definition. But your trend is your friend. So everybody's heard that before. So if you're thinking about it in those terms, the trend is down because you have full time frame continuity. The quarter, the month, the week, all those time frames, they're all indicating that the sellers are still in charge. And it's not until we can change the following week to a green week that now you start changing continuity and you start to take price higher. Okay. So that's key. And I'm glad that you guys are really interested in that full time frame continuity aspect, because it's very important to understand that the higher probability trades are the ones that you're trading in the direction of full time frame continuity, or the trading with the trend.
Yeah, I think
Okay.
it's just for options too, right? So many people, we mentioned if you're trading options, because most of this group does, you need to know that you have a big enough target, if that makes sense, right? And so like if it was a derivative, since it's a convex payout, it's not a linear payout like a futures contract, which is a linear, it you need to have a big enough target. And if your target's a couple cents or a couple dollars, you know, for an option contract, that might get eaten up in your theta or your volatility bleed, right? Like in the first hour of trade. So you may hit your target, but you may not make any money. So that's why it's super important to understand, is this trade going to be worth it for me to take it? Like, trust me, we can find, there's so many trades every day. They're like
There are.
so many trades every day. It's not a matter of whether or not we can find a trade. It's just a matter of making sure that the ones that we take are the best ones to take, if that
Mhm.
makes sense. That's what it's about.
Yep, exactly. And the other thing too that I would probably add to that is when you are exiting your position, you want to exit in strength so that the premiums are increasing while you're trying to get out of your position, rather than waiting for it to come back against you. Because in this scenario here for Bitcoin, let's just say you were playing an option on Bitcoin and you get triggered into the trade and it starts to go in force and your target is up here. You want to be selling your position, or you want to be closing your position that you bought um, in strength. So in the direction of that trade, so that you're not trying to get out of it while it's reversing against you. Because premiums, once it loses that implied volatility, you're going to see that crush your premiums. So that's another key point to add to that for you options traders, is that once it's working its way towards your target and it hits your target, you want to be taking your profit, because you don't want to give anything back to the market. You know, essentially it is your money, even if it's unrealized profit. You want to still consider that your profit. So we've covered broadening formations. We've covered broadening formations, the full
Did
time
you
frame
ever how to
continuity.
draw them? I know some people have a hard
Mhm.
time.
Yeah, yeah, I did draw one, but I can draw some more if you'd like.
Or just not to, like, what are you looking for
So
when you're
what
drawing?
you're looking for is lows getting broken and highs being broken. So it takes a lot of practice. But for instance, if we use this time period, this day, you have this low that was broken by this low. This low right here did not break here. So you're not going to draw a broadening formation from a low that did not break previous lows. So as you're looking at price, you're going to notice that if you draw it from this low to these lows, eventually price came back down to that target. You see that? So what we could potentially see is that these highs did not break these highs. However, it did break these highs. This high did not break here. So what you would do is you want to look from right to left and draw it from left to right. So then you draw here to here, and that's your most current broadening formation. Okay. It ended up breaking, and it ended up breaking pretty significantly, but then that recovery was just as quick. So when you find that you have exhaustion at these bottoms of these broadening formations, you saw that it ticked right here, came back up, and then broke significantly, found exhaustion down here, and then quickly, and within a matter of an hour, came right back in through that range. So when you're looking for those broadening formations intraday, that's what you want to be looking at. So you can do the same thing on this day. Here you have this high that was broken. If it lets me try it correctly, there we go. So this high was broken by this high. At the end of the day, where did it end up hitting? Right at the top of the broadening formation. If we had no idea where we were from here, this gave you an indication that we could potentially get up to the top of that broadening formation. Here at the same time, you've got new lower lows as well. So here you've got lower low. This was that broadening formation for that day. And you can draw them daily, but you can also draw them based off of these higher timeframes as well. So it is a matter of practice, but what you're looking for is lower lows being broken and higher highs being broken, because we have price starting to rediscover in both directions. Okay, does that make sense? So we were able to take out lows, we were able to take out highs. This is your broadening formation. And now you can see how we end up targeting those areas. When we failed to go through this lower end of this price and started to come up higher, as soon as you get that reversal, you're going to want to target not only these wicks to the top side, but you ultimately have the top of that broadening formation that you can target. And I'm doing these on the fly because, these aren't I didn't pick these out to show you guys. So when you go to those higher time frames and you go to the day, here you have these higher highs. So you can draw, did I get rid of those runs? Yeah, okay. So I've got this high that was broken by this high, and you've got this low was broken by this low. So now you have a higher time frame broadening formation. And now you can start targeting. Now that this reversed, you can start to see it come back through that range and potentially get to the top of the broadening formation, which we can still I think we still have more time to see how it played out.
Yeah, can I
Go
just
ahead.
touch on that too? So I know a lot of, myself included, historically and still a little bit, right? A very much horizontal level guy, right? If you're new to trading, like they call us horizontal people. I don't know, horizontal level guys, right?
Yeah.
Use stratters too.
I'll
right?
do you
Like,
I'll do you one even better too. Okay, so I'll draw that horizontal line for
no,
you.
no, I absolutely want you to. And this is what I love about broadening formations is that it basically, it's a principle. It's one of the core principles of the strat that you need to understand and always look, and I mean always look for. And I know you guys in some of the signals and stuff all draw these all the time, right? And I get kind of like, I start to drool over myself sometimes when I see one that's very clear, because what he's about to show you is that I know that horizontal levels are important, right? As a trader, as a professional trader, I will also tell you, like, we all know that the horizontal levels they're more like zones, and they act like the trampolines, right? They're not hard lines in the sands. They never are. But if you use like these horizontal, like these broadening formations, you can actually target just slightly outside of that typical horizontal level for your trades. And a lot of times you'll be able to get these targets, and that's how we'll, like, you see our P&L, like the P&Ls most of the time, we're like, I mean, average like is like 200% or something last week, right? Like that is, a lot of that is this, right? Like this very exact concept of understanding that, look, we had a broadening information on SPY, and we were able to like target just outside the downside, right? And we want to start to close out our puts, because once you break through it, the broad information will also be like a trampoline, like a zone, right? It's just the resistance. It'll push up and then come back, and when it comes back, it'll come back in force, like, strat speed.
Because in this area,
Yeah.
you've now found sell liquidity, because now you're able to take that out. And I know people use liquidity and don't really understand what that means. But when you're taking out, the people that went short here had stops up here. And those that use horizontal lines as their breakout trades, or they're considered breakout traders and things like that, get crushed with these type of moves, because they're like, okay, I'm going to take it here. This double top just broke, and now that double top broke, but guess what happened? As soon as it broke, liquidity was there to take it back to the downside. And so that wasn't a very profitable trade. It could have been profitable as long as they're disciplined with risk management, but as soon as it pops, it comes back in and then sold off even worse, because price has to aggregate.
Absolutely. If you don't have this principle as the main component of using the strat, and I think this is also probably a point where people, get frustrated too, is that they might have taken that signal of breaking above, for what is that,
45,469 and 32 cents.
They might have taken that as a signal to go long, right? And then they begin like, oh, it's a fake out, right? But if you didn't, like, before the signal in the strat, right? It's in order, right? I believe it's like, I don't know what the order is. I won't lie, but it's time frame continuity is like one of the top ones, right? It's broadening formations, and then it's the signals, right? The 1, 2, 3 scenarios. And so
it's actually, so you want to understand the reversal patterns, and you want to understand the reversal patterns because they happen at new highs and new lows. And so that is important. Broadening formations are a concept. Yes, you want to understand that broadening formations exist. I think a lot of people try and draw them so well that they kind of their
Yeah, they know
analysis by
exactly. Like,
paralysis.
yeah.
And I think because I finally figured out how to pop out the chat that somebody says, well, how often do you redraw these lines? And you only redraw these lines if you break new lows and new highs. You don't redraw them daily. You don't redraw them, every 15 minutes or anything like that. As long as the newer highs are broken or the recent highs are broken, you can draw a broadening formation. And so the reason why you don't really adjust too much is because then you're just consistently, it becomes subjective all over again. And drawing these broadening formations can become subjective, but the whole point of a broadening formation is to understand that they exist. Because I used this high and this high, but if I was to get rid of that line, if I was to use this high and this high originally, because this was the most recent high that was broken, I used that and that, where did it go? Right there. So it's not that we want it to be exactly perfect, but what we want to know is that, okay, we're making higher highs so that when we make a newer high, we are expecting that newer high, but at the same time, we're expecting it to reverse there. Because now you've found that newer high, you've found liquidity up here, it's going to come back through and price will have to aggregate. You're going to have to come back through that range. And that's exactly what happens.
What was that thing you used to call, like, it's like the TTO, right? And I remember one of our conversations, it was one of your old mentors. It wasn't a strat phrase, but it's like in Forex, they might call it a liquidity grab. Do you remember what I'm talking about? Where it basically it has to retrace to find more people to like get on. Like if it needs to go up before it can go down on this specific
Right.
chart, right?
And right, exactly. And it needs to go down before it can go up. Yeah,
Bingo.
exactly.
And that's because like there's not enough sellers at this level, so it needs to go a little bit higher to collect more sellers, and then there's enough to build that momentum, like the battering ram, right, on your
Right.
support or whatever.
Right.
But yeah, the broadening formations like visualize that very accurately, in my opinion. But
Right. Exactly. And when you're trying to figure out where to draw your broadening formations, I drew it from here because I didn't see what was going on back here. I didn't go
it wouldn't have
that
mattered.
far
Look,
back.
do it though,
But if you
because it's
didn't
the
know,
same.
if you didn't know any of this information right here, if I was to draw a broadening formation because this low broke this low, then I would draw my broadening formation from back here and it would go right here. And where did we go? Right
Bingo.
down there. So just the simple fact of understanding that once you break lower lows, you're going to find reversals. And if you're that breakout trader, sure, this one would have worked. If you're like, okay, if it breaks this level, we're going to go down. And we did, but then it reversed right away. So if you're shorting Bitcoin and you're like, this thing's going to go down to here, and this is my target, and it misses it, that's because it reversed. It found liquidity down here to bring price higher, to find more liquidity back down, and it's going to aggregate. And where did we end up coming? To the original spot that you envisioned, but it took some time because price has to aggregate. It's not just going to be and I know you see these straight down shots and these straight up shots, but they don't happen that often where price has to fluctuate. And it's not until you get some consolidation where you get bigger moves. And so we finally got to that level all the way down here, but it took how many? This was back in July of 2021. And then we finally found that bottom at the end of here now, like in May, these last few weeks in May. But you could have also targeted that area, not only because that was another area of what people consider support and resistance, but you get this broadening formation from these lower lows getting broken. And that's exactly where we ended up coming down to and reversed slightly.
Is this live? Is this current chart?
This, no, I'd have to get out of replay feature. And so this is live now. And this is the 26th of May. Yeah. So
Yeah.
that's us here right now.
Bingo. So like if you could take this chart, right? And then if let's say you were a crypto trader, you could say, look, I can't, if you were to zoom in, right, on a daily, like on the same candle, right? You got these numbers right on your candles, right? If you go long, you can see, and because I want to go here because someone was asking about support and resistance and if it was important to know, and I actually answered no. It is important to know, but you don't need to know it as support and resistance. You don't need to know it as supply and demand if you're doing this correctly, right? If you were
Right.
to flip to a monthly candle chart, right, that monthly candle will be your support and your resistance, the top, the high and the low, right? That's what you would use, right? So boom, look at that, like look at that range right there. And so his next target, if he gets a new month down, your target is clearly you'd have to open below that 20, it's like 24 something, the wick of this month's candle. Because
Of
we're
this month's, yeah.
yeah, because
I
we're
mean,
towards the end of the month, right? So towards the end of the month, then your next target is where? It's just right there. That's it. But that's a nice, juicy target,
yeah,
just to
that's
be
the,
clear.
yeah,
Um,
that's
it,
$8,000 move down.
and will that make sense for that broadening range? Yes, it would. Is that likely? I'll tell you, no, it's not, because and typically, if you guys look at these numbers, they're kind of in a general order, like 212, 312, 22, right? Like 3, 2, whatever. Typically after a directional candle or a directional series, like you'll get an inside bar. And as traders, we will the setups that we look for, the setups that I look for as an option trader are inside bars. I'm looking for those ones. I'm expecting next month to be inside that this month's candle, most likely, right? And then the month after that, I'm going to have a really juicy trade, but it's not until then, right?
Right.
Like, that's most likely, unless one of the ends of this month's bar is taken out. But
Right.
it's not something I'm
And
going to be
and
trading.
I would add to that too,
Yeah,
is that everybody wants to be wants to day trade, but this works for people that want to hold longer term as well, because you had your target down here. You want to take these lows out. And when you have a 2-1-2 reversal to the downside, you knew where your targets were. As soon as if I remove all these drawings, get rid of all that noise, this is your entry on the monthly to be able to then target this low, and these lows. So not only did you get your target or your trigger to go in, you hit 1, 2, 3, 4 targets, and we're on our way to go down here. Will it happen? Like you said, maybe not. But if you get a 2 continuation down, we could potentially see next month. However, if there is some type of consolidation and you get another 2-1-2 reversal back up to the highs, you just flip what I just did, and you can get rid of these drawings. And now if we go 2-2 reversal up, then you take it long at $40,038.27, and your first target is going to be 47,469.40. And so you get your entry, you get your first target. If you get that 2-2 reversal in your favor, and it starts to change your continuity, so your month will then be
right.
green, and then you can start changing
That would
that
be
quarter.
huge, right?
Right. And because then then you're
Huge,
trading in time frame continuity. You have your entry, you have your target, and you're good. You just need to manage that winning position. You don't want it to go against you and kill you. But this is on the monthly time frame.
right?
So you're planning on holding this thing for at least a month to hit that target. Not saying that you have to hold it for a month, because if it goes against you and you're still holding it a month later, and you get one of these candles that kind of looks like this, I'll just kind of draw it out.
Yeah.
Uh, so, whoops.
While you're drawing that, though, I think it's important, right, to know that, you know what, you shouldn't be thinking about. I think the point was not to give you a Bitcoin to 16K target or a Bitcoin to 47K target. The point was to not be thinking about those levels until you break one of those other levels first, right? At 40,000, you
Right.
can hold above
Exactly.
40,000 for a full week in the first week of a month. You should reasonably expect 47.5 to show up in a very short period of time, right?
Right.
But at the same time, if it's a brand new month and you're clean below 24 or whatever, you should reasonably expect to see 16, 17K in a very short period of time.
Right.
Um, but
So
that's the logic.
right. So now when I'm going to draw this candle, when we're looking at different scenarios, let's just pretend the month of May is over and now this is the month of June.
Yep.
Currently we're trading right here. So our candle would open here. If it's within any of this, like within a penny, and then it reverses, it's still an inside candle. It never broke. Once it breaks, then it becomes a 2 down. But if it gets to there and maybe like to the penny and then starts coming back through that range, it's going to be a nice looking wick, but then you start to get price come through here. And then if it doesn't break that and it still stays in and then kind of chops around for the entire month of June, you're not taking this trade on that higher time frame. You're going to be patient and you're going to wait for that break of 40,038 and 27 cents. And then even then, so let's just say hypothetically, because we're just speaking in hypothetical terms, what I'm trying to do is show the different scenarios that can possibly happen. Is you open here, you push price down, comes back up and then chops around for a little bit, but it finally breaks to the top side. But then all of a sudden it kind of goes against you. And if you're not stopping yourself out, if it's coming back through this range and it comes all the way back through and then ends up taking out the other side, that's a 3 scenario.
Boom.
And those exist because
and they're extremely profitable, right?
Right.
You should know, like, this is the point, right? To know, I love how you're doing this, how you're visually like showing this. Cause we had what was it? AMD trade the other day, right? I know like a lot of us traded AMD and it was a rev strat, right? It was a 3 on the day. But the second, like we saw it going up, okay, going up, but we know like, okay, little broadening situation. And the second that it had opened green, but the second that thing flipped red on the day, you're like, oh, this is gonna be good, right? Because they had momentum, and I'm like, this thing's gonna be a flusher, right? Like you could see SMH dumping, right? Like every semi and their mother dumping, and I'm like, all right, this is just like you could just go, like it's just like let's get you crazy targets, and I think we got like 6, 7, I don't know how many hundreds of percent. Then we were probably one of very many, like a ton that got that. But if you don't know that is how price action works, like it's you'll miss it. You might be like, oh, waiting for it to bounce at support, right? Like it doesn't work that way, really. Like it just doesn't. It's just you have to play price action. Number 2, like do not buy at support in a bear market. Like that's not how you trade. That does not work anymore. It does not work here, buying at support. And that's why you kind of want to do away with that old mentality. This is the difference between changing your mindset from trading to from investing to trading and understanding price action. But yeah, if you drill down on the week, you could break this down, but you have to know that your targets are only on one end or the other of that monthly candle at this point, right?
And,
so
and even if you are an investor, you can still use this, because if you're looking for a value in Bitcoin, if this goes 2 up, you now have that reversal at the bottom of a broadening formation. So now in the monthly, you're looking at a broadening formation looking like this. Okay. You have here to here, because that's the low that was broken. These are the highs that were broke.
Here we go. Yeah.
Okay. So if you're a value investor and you've now broken lower lows, so now you've taken care of that end of the broadening formation. Anybody that was like, oh, I'm gonna take this breakout short, I'm gonna short the crap out of Bitcoin because it's gonna go to 10,000. You're gonna get crushed if this thing reverses against you in the month of June and consecutive other months as well, because this could take months. I'm not saying this is gonna happen in June where we shoot way the hell up here, but it's gonna take months of going up and down and up and down and up and down and up and down, where eventually we can get to the top of that broadening formation and then take out those highs. But it's not until you get price to aggregate. You have to hit this target first, and then it can come back. And then you could hit the top of that candle and come back and then kind of trade sideways for a little bit, maybe have a bigger correction. You don't know. That's why you don't want to make predictions. That's why everybody that's making predictions on CNBC is constantly wrong, because they're trying to predict.
Hey man, they make good livings about predicting.
Yep, they do. And I give it to them. But that's because they're good at selling people BS. So if you get that too, so back to kind of what I was saying, if you get that too, and it starts to come back through this range and you're still in this trade and you don't understand broadening formations and you don't understand that 3s exist, then you're still holding this thing to the bottom of this candle, because traditionally this is your entry, this is your stop loss. That's too wide of a risk. There's no way I'm going to be taking that. I'm going to be cutting myself short because I know 3s exist, that if we take out these lows, then we expand the broadening formation. We're starting to go lower, and then we're targeting this down here. So those are the different scenarios that can happen. We could trade inside the month of June, and this could be what the candle looks like, maybe with a couple of wicks. But if we stay inside and then go 2 up, then great. Then that's when we take the trigger, and then this becomes our target. And then this is our secondary target, and we can see it go further because this could have been the reversal, a 2-1-2 reversal, just like we saw here, a 2-1-2 reversal. So there's the scenarios will play out. It's not our job as traders to predict. Our job as traders is to trade the price action. As Paper Gain said, one way or another, this is how people are trading, whether they know it or not. Especially more importantly, the ones that are profitable are playing price action. They're just not calling it price action. They're calling it something else. But did this support and resistance level hold? Depending on who you talk to, they're like, yeah, it held. We bounced right there. I mean, we held it. Well, really, you didn't. It broke below, because anybody was like, okay, I'm going to
who
take
had a
this.
stop there. Anybody who had a stop there, like closed their position, sold what they had, and are watching it go back up, right? Like, it's tough.
Right. Exactly.
You guys will see in my, like, when we send stuff too, like, it's important to have stops, but like anyone that's in this webinar knows I don't have hard stops. Like, I have a mental stop, but I will let, like, if I see small candles, right? If it's not a big candle whooshing through my stop, like I will actually give it a lot of leeway, not a lot, but like enough leeway to where what I'm looking for is that it may be one of those broadening kind of situations, or something where support or resistance is acting like that little trampoline. And you know what, majority of the time that's what happens. And when you look back on your losing trades, I would like venture to say that you're stopped out of trades too early a lot of times, and you can look back and like, damn, I should have held that, right? Or like, damn, I should have reversed the trade, right? Like, this is the concept that you might be missing, and understanding that it's not a hard line in the sand. And maybe if you're looking to trade long, you wait till it's outside of a broadening range before you enter, right? Or if you see that opportunity, maybe you look for an entry below support to go long, or above resistance to go short. But we'll go through that stuff in some of the other webinars. But this is going to be the basis of, and as this series goes on, by the way, I know I just want to be sure that we get enough time to get to TTOs. This is going to be the basis of like a foundation of whatever you trade. It's to be built upon, right? What we're looking at in terms of the scenarios is candlesticks. It's the simplest, cleanest, most elegant way for anybody to understand how to trade candlesticks. Call it what you will, but it is candlesticks. And hammer candles, shooter candles, pivot machine guns, that's what these scenarios are. And it's teaching you how to know what's going to happen next from candle to candle, and definitively not to look at 5 candles later, right? That's what's important.
Right, because you have things like people want to look at EMAs and things like that for confirmation, or volume for confirmation, or MACD and all that. By the time the MACD is crossed over and the EMAs
or
are
RSI, man.
over,
Oh my God, don't get me
RSI
started.
or anything like that. By the time this has now finally crossed to the area where you're like, oh, I've got all my 4 things of confirmation, you've missed this entire move.
Yeah.
And then once you finally get into that move, then all of a sudden there's a slight little pullback. And this is why I bring this up, is because this is what a TTO is. Okay, so I'll get into this concept here of what a TTO is. Okay, a TTO stands for triangle they out. Okay, so a triangle they out is corrective activity. That's all it is. But it's easier to say TTO than it is this was corrective activity. Once again, we're just trying to communicate faster. So when we say triangle they out, it just means that, let me see if I can get a couple lines in here. Polyline, not that, I need the drawing tools. Drawing panel, where's my polymer lines?
Polymer line, it's by the brush.
Is it by the brush?
It's in the brush category, by the box. Click your box, down, triangle.
Okay.
Ta-da.
No, the polyline, or the path. Okay, So
half
yeah, I will get the triangle. Okay, but
same section. Yeah.
so here we have obvious movement higher. We go from here to here, and then this is the first area where we get a 2 down. So everything to this point has been an inside or a 2 up. Can everybody see that? Do you see that, Paper Gains?
Yeah. So what he's showing you here is that it's well.
So
He's
let me
gonna go a
finish
little
drawing
bit
that.
further.
Okay,
Yeah.
so here, this
So,
is where we've had our change in continuity. This is where now we had that reversal. And now we have an inside candle, 2 up, 2 up, inside candle, 2 up, inside candle, 2 up, inside candle, first candle that finally goes 2 down and shows us some corrective activity.
yes.
So as soon as this corrective activity happens, anybody that was going long here that kept their stops tight and they get stopped out of this trade,
Bye bye.
yeah, then all of a sudden it's like, nope, we're going back in the direction that we were going in.
And
And
they
it's these
FOMO.
people,
Damn it!
yeah, and
I
then,
shouldn't have sold.
yeah,
I
I
buy it.
shouldn't have sold, damn it. And like, man, and so then what happens is
There you go. Push.
you get this final push up. And so you can see that in this upward momentum as well, but you can also see it here. Let me get that back.
So I think while you're looking for that, what I think he was going to say, or what I would like you to understand, when OG's talking and he might be pointing some stuff out, I'm looking at his chart and I'm listening to him talk, and I know that he's thinking, although we're looking at a 15-minute candlestick chart, he's a professional trader. Like, this is how we think. You're thinking all the same time. 4 15-minute candles is a 1 hour candle, right? Like that's how you're thinking. So yes, it might be a 15-minute chart, but that those 4 candles, 1 2 3 4, right, like that he's right there, or 3 in the middle, those 3 are all technically inside that first big green one. And so it's not until that last one starts to go where it's a red bar, like that's your boom, fire, go long, right? But it doesn't matter. Like, I wanted to point that out so that you guys understand. I could be looking at a 30-second chart and I'm thinking in terms of a 15-minute chart, and I'm putting, yeah, like a 1-minute chart. I know 15 1-minute candles is a 15-minute candle. I know 60 1-minute candles is a 1 hour candle. Like, we're always thinking in that, like with that mindset.
Yep, exactly. And so what we're looking at here, and I can end up actually moving this down to here, is we have our initial momentum, our initial push down, and then we get our reversal, and then it resumes back in the direction that we were going. So here, it's that same scenario where if you're short here and you have your stops here, these stops got taken out, and then all of a sudden it resumes back in your favor. So this is a triangle day out. And if you ever hear Rob's videos and stuff like that, or maybe in his live room and things like that with the Sepia Group, he'll always say, like they got out. Yeah, that's what I was getting to. But he'll say the TTO, triangle day out, or they got out with the try, get. And that just means that here we took out those stops, and now we're going to go back and resume in the direction we were going. Same thing here, in the direction we were going, came down. Anybody that's fearful or is trading emotionally in the market is like, okay, I'm going to get out here just for it to reverse back. So it's like, here's you go. They got out with the try, get, because that's how price moves. You have to have some corrective activity in order for you to resume back in the direction you were going. It's these times where you get this corrective activity that is no longer corrective activity and you're changing direction. That's why people get confused, and it's like, okay, what is a triangle day out? You only know that it's a triangle day out when you end up getting that corrective activity going inside and then getting a reversal back to the downside. You're not going to know that it's a triangle yet, because this right here is a complete reversal of where we were going. So that's why you want to have your stops tight, because you don't want to get stuck in a reversal thinking and hoping and smoking that hopium, thinking that it's going to come back down in your favor because you studied Elliott wave and it's supposed to go 1, 2, 3, 4, 5, and then you're lost in the sauce because you didn't realize that, oh man, maybe I should have had a stop, because reversals happen. And if you pay attention to your broadening formations, you've got your broadening formation that was formed back here, that all of a sudden you've got this area to target. Not necessarily that it hit it perfectly. You're never always going to hit it perfectly. Sometimes you find some good examples, but you know, this low didn't break this low. So really we're moving this to down here, and this right here, you've hit that low, hit perfectly, exhausted, come back through. So as long as you understand the principles that we're trying to teach about price action, then you're going to be fine. But as long as that's the base, and then once you're good at trading that price action, add all the lipstick you want. I still trade using VWAP because volume is important to understand where the value of that price is. So I like using VWAP and pivot points to kind of give me a sense in where I'm at with price, and get my mind into what are the institutions thinking, where are they going to get value out of their price? Because I'm playing against somebody else in the market. I have to, just like if I was playing basketball, I have to come up with different plays and different scenarios and come up with what my game plan is based off of what I think they're going to give me the look. What they're going to have is their offense. I want to make sure I have a good defense, and what I think their defense is going to be, I want to have a good offense too. So that's why it's important to understand all of that stuff.
Beautiful, man. Love it. Cool. I think there's a couple guys. I mean, we can go through some of the questions here.
Yeah,
Help you.
we can go through a few. Because I still got to pick up my kids from my parents.
Yeah, I don't want to hold you up too long.
I didn't think I was going to go this long. I usually never go longer than an hour, but you guys are.
Well, dude, we love it. They're learning. I will send some slides out to you, by the way, to anybody who attended. And we still got like 50 some odd people like actually hanging in, listening to you, man.
Yeah,
so still want it. But anyways, yeah. So we got
so real quick. And if anybody wants to get more of it, tune in tonight at 10 p.m. Eastern to my YouTube channel, and you can keep on asking questions. I do it for free. Like I'm not asking for anything other than participation.
They're like, gimme. Yeah. So just go youtube.com and search OG space trades. You will find him. You'll have with the first thing that pops up for me is this beautiful beard on some, looks like YouTube shorts. But yeah, every night, literally every night, right? This guy is putting in work, man. I just I can't thank him enough, for everybody here. But, this is a resource, I want you guys to get exposed. OG is the real deal, right? And that's all we're going to show you here. This professional traders, this is what we do for a living. I don't have another day job. This is it, right?
This is it.
Yeah, this is it. Also, at OG Trades TA on Twitter is at OG Trades TA.
Thanks, Julian. You put up the YouTube there. Thank you. Appreciate it. I didn't mean to cut you off, but I don't want to cut this off either, because I know like I said, I went the route of trying to create a bot, and I almost felt like I was not doing enough justice in this world right now. No, I'm just kidding. I'm no Superman, but I just want to do my part and make sure that you guys are educated, because I know the learning curve was super bad when I started, and there wasn't all this information. You had to go out and buy books. You had to go to Barnes and Noble or the Half Price bookstore, and you had to find somebody that was a profitable trader to hopefully mentor you. But there's so much information out here that is great information. You just have to know where to get it. Paper Gains is definitely one of them. If you guys want to know more about the strat too as well, I participate in the Addicts Trades Discord as well, and I trade there live as well, and I'm active there. You're going to get a lot of good information here with Paper Gains. You'll find great information with the Sepia Group as well, because that's where Rob Smith is. He's the guy that created the system that we're trying to teach. These principles that have been used for years with profitable traders, but now it's just explained easier, and it's much easier to communicate. So I really appreciate you guys that have been sticking around as well. So do we have any other questions that we kind of want to kind of touch on before we head out?
No, I think it looks, unless Bright wants, or some of the guys had live trades, but I mean, I don't want to have to put you through the live trade stuff right now. There's just go to, here's the thing: you're not going to get all of this in a single sitting.
Oh,
What I
no.
want, what's important is that you guys understand the concepts, the biggest pieces of the concepts. You know, like full time frame continuity, broadening formations, and the three possible scenarios that a stock can do. That's it. There's nothing else in this system, and those are what we call like what they is called like the universal truths, right? Like those are the three things that are true. Anything outside of that isn't always true. Like it might sometimes be true or has your asterisk or whatever, right? In certain scenarios, these three things like are always true, no matter what, no matter the market, under whatever and underlying. So just understand those concepts. Follow OG Trades on YouTube, Twitter, whatever. Like and yeah, use him as a resource to start learning your trades. You know, we'll have another 7 or 8 people come up back to back, right? Like we're gonna build a whole foundation of learning. But this, like I said, this is the number one piece of understanding the basic foundation of learning how to trade, understanding there are 3 types of candlesticks. I don't care if you call it a shooter, abandoned baby, a star fly, a dragon, doji, hang, it doesn't matter. It's only one of 3 things. A scenario 1, scenario 2, or scenario 3. Doesn't matter. And the only time a candlestick pattern is triggered is if the very next candle is clean above or clean below. There is no other situation that a trigger is real, right? Like we're looking at a live chart on 15, right? Like you got a trigger right here. And your target is where? Like at most, right? You've already hit boom, 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 right?
Hit 2 targets already. Hit 2 targets already.
There's no question in your mind where this should be going, period. And you know that you're starting to hit targets, right? Like that's how it works. That is what's true. There is nothing else. There's no momentum, no oscillators, no moving averages, whatever, right? Like you can use VWAPs. What I will say is very important. And OG mentioned this also. So 15-minute candle, boom, right? Like you're probably going to be out. Your stop is right at that bottom yellow line at worst, right?
At worst, but as you know, like as I mentioned, it's like by the time it went in force already, you're moving your stops up, and then if your first trigger, second trigger, you're moving that stop up. And
that top yellow line, that's the one right there, like that blue inside candle. That's what I was going to say is your stop, right? Like every trigger, every target as you hit becomes a trigger, right? And that's how you, and maybe you do two targets down, and that's how you manage your trade. That's up to you. But you know, now that you have this system, how to define those stops, how to manage your trades, what a realistic target should be. Look, we're not going above this like prior candle high. So should you expect it to continue going higher? No, you should not. Not until you have another candle that's clean above it. For now, you should expect this candle to come down, right? Until it's above that 29,632.92. It's not going to 29,657.10. That's just what's true, right? And I mean, that's how it should be. And I mean, sorry for my rant right there.
No, you're good. You're good.
But yeah, that your daily, like monthly, weekly, daily pivots, right? Also prior day high low, prior week high low, prior month high low. I'll say like I don't know what pivots OG was talking about. I'll tell you, I use those as my core levels, like my core pivots, and I do trade the strat based on those very specific pivots.
Pivot points? Is that what you're talking about?
I don't use pivot points. I just use like weekly. So if you like go into your strat settings.
Yeah.
Your strat teach settings. Yeah. And then scroll down. Okay, so
you're talking about your time frames?
TF1. Yeah. So I like just forget about the 1 hour. I just do daily, weekly, monthly, right?
Yeah.
Those 3 levels right there. Where do they show up?
Right here.
So they're the dotted lines?
They're the dotted line.
Can you like squish it? Squishy something.
So there's the previous day high. Or no, this is the day high, current day high.
Current day?
Yeah.
Yeah, I'd have to have a wider view.
Yeah, I know. Yeah.
I would take a trade, a more convicted trade if it's above that top white dotted line up to maybe the weeks like next week's, whatever the next dotted line above that happens to be. But I guarantee you it's going to be there because that strat teach thing automatically puts it there.
Yeah,
Yeah,
and that's the nice thing about the strat teach is that it does those lines automatically for you. I was talking about something completely different. I'll get the pivot points out of there, but yeah. So yeah, that's
I bet you they line up, dude. I'll just say that.
for
Yeah,
what?
probably. But your pivots, like
The
typical
pivots?
Yeah, they'll be very close.
Yeah, for the most part. And then like I mentioned, the only other thing that I like to use is the VWAP.
Yeah, I'll use that too. So
I mean,
so the candlestick setups, I say candlestick setups. I've always been taught like candlestick setups is a
mhm.
like the thing. It's those actionable signals. I don't think that we got to it, so maybe you have to follow him and he'll show you all about those later. But there are specific sequences of
Yeah,
candles.
it's
Three,
that
one,
combo
two.
sheet. If you're gonna give them your slides, they're gonna have that combo sheet. So those are the actionable signals.
Yeah. So specific sequence of calendars and yeah, defining exactly what your target is essentially. But
Yeah.
like I said, it doesn't like you can use that. That's the strat like strategy. But however you read any candlestick, anything, the only trigger in any flavor variation is not until a brand new candle appears higher or lower than the prior candle. Period.
Yeah.
End of story. Done. Right? If you see a hammer
And
candle, it means
so
nothing. Right?
yeah, well, the one thing that because I'm just looking at the chat real quick, and I kind of want to touch on that.
Yeah.
All of the information about the candle is important.
Yes.
Everything is important, but I think people get too hung up on the fact that, oh my God, this is a huge bottom wick. The wick is super important because, you know, that means the buyers stepped in and they're pushing price higher. You know, this is where the buyers are, but what the hell happened here? I mean, if the buyers were here and they were pushing price up, why is this wick important? It doesn't, as long as you know the high and the low of those candles and you're only using the previous candle to tell you what your next move is going to be, that's the important part, because then you're playing just strictly price action.
Yeah.
And then
if
I
at any
believe
point
somebody,
you think you're going long and it breaks below the prior candle's low, you better go short. That's all.
yep, right.
Yeah.
Right. As long as it triggers, then that and you've got your right combination and everything, that's what you're looking for. I know somebody asked how I use VWAP. I'm not going to get into that, but I can get into it tonight when I go on live on YouTube, but I do have to head out to pick up my kids.
Dude, I appreciate it, man. It's been a lot. It was huge. They'll have questions coming for months, I'm sure. But yeah, you guys can comment on his videos and stuff like that. And again, you know, I have most of your information. We'll get you some of the slides and everything, and everyone's contact, and we are good to go. Cool.
Awesome.
Yes. I will not send it to one person. I will send it to everybody who registered, and you will get it in email. So you have it.
Perfect.
Beautiful. All right, boys and girls.
Thank you, guys.
It's been fun. It's been real. OG, you're the man. You rock.
Thanks. You too.
Later, guys.
All right. Bye.